Good afternoon, everybody. It's a real pleasure for me to be here at the Mining Journal Conference, to have this opportunity to talk to you about a subject very close to our hearts, the gold sector, and why we believe West Africa is a key player in the future. I'll start today by giving an overview of Endeavour Mining, for those of you who are not aware of who we are. I'll then go on to talk more generally about West Africa as a mining jurisdiction and the opportunity that the region presents for explorers, developers, producers like ourselves, and ultimately investors. So to start, Endeavour Mining, who are we? We are a premier African gold producer based in West Africa. We have 5 operating assets and employ approximately 5,000 people throughout the region. We have a mine in Mali called the Tabakoto mine, 2 mines in Burkina Faso, being Houndé, which got commissioned and had first gold pour in Q4 of last year, the Karma mine, which was recently acquired in 2016, the Ity heap leach in Côte d'Ivoire, the Agba mine, which we constructed and brought online in 2014, and 2 projects, being the Kalana project, which was recently acquired in September 2017 as a part of the Avnol transaction, and the current project, Ity CIL, which is under construction and 50% complete to date. From 2018 perspective, Endeavour is looking to produce 670 to 720,000 ounces this year, and trying to achieve or guide on an all-in sustaining cost of $840 to $890 per ounce. One of the key operating factors or benefits we have is that our regional office is based in Abidjan, in close proximity to all our operations. In Abidjan, we have the COO, the EVP of exploration, and majority of our technical team. This allows us to be very hands-on in terms of how we operate our business. With one of the largest and most promising exploration portfolios in West Africa, the company is targeting a 10 to 15 million ounce new discovery over the next 5 years, with the aim of ensuring a collective average mine life of at least 10 years for the organization. When I look at West Africa today, we are only the only player with a purely West African exposure with multiple assets across a diverse across multiple countries. Endeavour seeks to offer investors exposure to value creation across the entire cycle, with immediate cash flow from our existing operations, near-term growth from our projects, and long-term upside from exploration portfolio. Endeavour's objectives that we have been pursuing since we launched the strategy in 2015 is to achieve an all-in sustaining below 800, production above 800,000 ounces, and have a group average mine life in excess of 10 years by the end of 2019. So why 800,000 ounces at an all-in sustaining level of 800 over 10 years? Because this creates a sustainable business model where the company can generate enough cash flow to reinvest in exploration, fund development of its projects, and ultimately pay dividends to its shareholders. You should see on the right, we'll have 4 strategic levers which will assist us in achieving our objectives by the end of 2019. Operational excellence, ultimately meaning operating our assets the best way possible, project development, executing on our construction plan and developing our projects, unlocking the exploration value that we have in our existing portfolio, and managing our balance sheet, looking at our assets, whether it can meet ultimately the objectives that we are aiming for by the end of 2019. You can see here we have a more long-term ambitious goal, improving the production profile further over the next few years. Ironically, when I first started with Endeavour, we didn't produce a single ounce of gold 8 years ago. Today, we are achieving close to 720,000 ounces, and by the end of 2021, we'll be producing in excess of 900,000 with its existing portfolio. To the right, we can see Endeavour's 5 operating assets. It's a good example of how we manage our portfolio, where we disposed of the Zima asset in December, which we acquired in 2011, because we knew strategically it could not achieve our 2019 objectives. In addition, in 2016, the disposition of Yuga, which we ultimately started the business with in 2011. From a project perspective, we can see 2 projects moving from a DFS stage into a construction, ultimately into production. And it's worth mentioning that our construction team have a fantastic track record of having built Nzima, Agbao, and the Hyundai mines below budget and ahead of schedule. And with an impeccable safety record with no LTIs to date, including the current construction time at our ETCIL project. Moving further out to the left, we can see the strength of our pipeline of exploration. We have embarked on an aggressive exploration strategy since 2016. And I'd like to highlight Carry and Carry Pump, which are significant discoveries that we announced in Q1, which is adjacent to our Hyundai property and Hyundai operations. So that's Endeavour in a nutshell. I hope you can already see why I've chosen to focus on West Africa. But let me show you how a little bit more, why we believe why West Africa is a mining region of the future, because ultimately the numbers speak for itself. To highlight, it's just not our view, but the reality of the market. Gold companies operating in West Africa have raised more than $6 billion in equity from investors over the past 10 years. That is second only to Canada, and far ahead even more traditional gold regions such as Australia and the United States. Those funds have now been deployed across the West African region. I've highlighted Burkina, Cote d'Ivoire, Ghana, Mali, and Senegal on the chart, which shows $400 million was spent in exploration during the course of 2017. A total of $5 billion has already been spent in the past decade in this region. In total, around 10% of the current global exploration budget is now being spent in West Africa. To give you a sense of what that looks like, to give you an idea how much excitement there is in West Africa, this chart maps the money being invested in exploration against the size of the landmass. The geographical footprint of this region is 5 times smaller than that of the United States, which means that the attention focused on exploration is highly concentrated per square kilometer. And this chart shows you why. The investment over the past 10 years have translated into significant exploration success. The combined countries of West Africa have experienced gold discoveries totaling 80 million ounces. That's 60% of the number 2 region of Colombia, and around double the success achieved in traditional gold regions such as Canada, making it the number 1 global region for gold discovery over the past decade. But this is no coincidence. We have known for a very long time the Birimian Greenstone Belt that cuts across West Africa, shown in green in the chart above. You can see how the operations in this region, including Endeavour's, are neatly plotted along the Greenstone Belt. As you can see, Endeavour is well positioned within this region. We are the largest producer in Cote d'Ivoire, with one of the largest exploration land packages. And we're also one of the largest players in Burkina Faso, with 2 existing operations. But despite the long history of mining in the region, there are differences within. Our focus countries of Burkina Faso and Cote d'Ivoire remain underexplored. Between them, host around 60% of the Greenstone Belt, but yet only produce 25% of the region's total production. Compare this with Ghana, there remains a considerable untapped and unexplored potential, which we believe supports our excitement about this region. Investors are also beginning to recognize this. As I said earlier, close to $400 million was invested in West Africa gold exploration last year. Almost half of that was dedicated to Burkina Faso and Cote d'Ivoire. And this is starting to pay off. The chart above gives you a regional perspective. Production growth over the past 15 years from the West African region has increased by 81%, which is 24% increase from 2012 production levels of 6 million ounces, taking the region into 4th place in the global ranking of producers by the end of 2016, with 8 million ounces of production during the course of that year. Drilling down even further, over the more recent 5-year period, you can see that the growth has very much been driven by Burkina Faso and Cote d'Ivoire, with the latter country experiencing a growth rate of 162% in this period. This represents a growth of more than 1 million ounces in the two countries, more than 3 times as much as Mali and Ghana. And that brings significant advantages for companies such as ourselves, Endeavour Mining, which we have significant exposure to the region in general and to those two countries. Endeavour is currently the 4th largest producer in West Africa, behind Randgold, Newmont, and Goldfields. We expect to overtake our peers in the coming years to become the 2nd highest or the 2nd largest producer by the end of 2019. The reason for that, our pure play focus on West Africa as our home of our operation. This gives us the significant advantage in terms of being able to focus on a particular region. Yet within that, we are diversified across mines and countries within that geography. Too often, we think that people take a negative view of Africa as an investment destination, based on a lack of awareness of the continuing development in the region's governance and legislation. The countries that you see in blue here form a common West African area called the WAMU zone. All using the same currency, pegged to the euro, with one common central bank for all 8 states. The central bank dictates the majority of the monetary policy within this jurisdiction. These states are increasingly become more stable democracies, with elections being monitored by the IMF, which also offers guidance on fiscal and monetary policies to further embed stability and good governance within the region. As mining is an important part of the region's economy and one of the keys to social and economic development, the states have created a sensible and balanced mining codes that seek to encourage investment while also ensuring that the value created is shared across all stakeholders. The mining and tax codes are well aligned with global mining jurisdictions in key aspects and highlight that transfer pricing, OECD principles around tax-based erosion, and standard tax principles that are consistent across all 8 countries have been introduced within the jurisdiction over the course of a number of years. And with the standard of legislation and governance now in place, this has been recognized by the influential Fraser Institute, a non-partisan economic research institute based out of Canada. It ranks countries on their overall policy attractiveness based on topics such as legal and taxation systems, political stability, regulatory framework. It concluded that West Africa as a region ranks higher based on the quality of its infrastructure and regime than the rest of Africa and other developing regions. With a score of 62, while that is lower than 74 by the countries such as Australia, it is significantly higher than scores for South America or Asia, for instance. Thank you for listening, and I wish you good luck with the remainder of the conference. But I just wanted to use my last slide to conclude with what I've told you today. There are strong reasons to expect that continued growth of West Africa in the West African gold sector will continue. Equity markets are beginning to recognize the attractiveness of this region. Exploration growth is rapid, leading to enhanced production in years to come. And the geopolitical environment has significantly improved over a number of years. That is why we at Endeavour believe that the luster for the gold sector in the region that it presents will remain so for many years to come. Thank you.
Thank you very much, Michael. Thank you.